Hi, everybody. I'm David Asman. Thanks for watching. Kicking off tonight. Now, if you believe that markets are pretty good forecasters, then the huge sell-off in gold today is probably forecasting that Ben Bernanke won't be printing more money anytime soon. That's because when the Fed prints more money, the value of the dollar goes down and the price of gold goes up. Here's what I'm talking about in the chart. And gold was going down today, big time, just as investors are focused like a laser beam on Ben Bernanke's speech in Jackson Hole on Friday. So is there hope? Perhaps false hope, but is there some kind of hope that the Fed is finally listening to the people out there, telling them to stop debasing the dollar by printing more cash? And does this mean maybe it's time to sell your gold? We welcome Euro-Pacific Precious Metals CEO Peter Schiff, who is always buying gold, and the author of How an Economy Grows and Why It Crashes. Also, another author who talks a lot about gold, Mark Matson. He's the CEO of Matson Money. He says gold is great for jewelry, but bad for investors. Gentlemen, thank you very much for coming. We got a great all-star cast.
Great to be here.
Mark, first to you. Let me go to you first. You're in Cincinnati. Is it conceivable that the Fed is finally listening to the people out there saying don't print any more money?
Well, let's hope so. We don't need any more loose money floating around. But look, gold's never been a good long-term investment. It's only for speculators, not for good long-term investing. The average rate of return of gold is about 4% compared to Treasury bills at 5%, and the standard deviation of gold is 19. That means it has the same standard deviation of stocks, and stocks have historically made 10%. So it's only for speculators, not good for long-term investors.
I think Peter begs to differ. Go ahead, Peter.
I've been buying gold for over 10 years. It's been good for me. I guess it all depends on your time horizon. I mean, people who bought stocks 10 years ago have lost money. And I think people who are buying bonds are going to lose even more.
But is now the time to get in, just as gold is dropping by 100 points in one day?
You got to remember, we were at 1,900 yesterday. I mean, we came a long way. I think the sell-off
So we were overbought in gold.
Yeah, I think it was technically inspired. Look, I think it would be great if Ben Bernanke heeded the message of gold. The rise in gold price is telling us that money is too cheap. Interest rates are too low. But what is the Fed going to do?
Hold on a second. Is today's drop telling us that Ben Bernanke is not going to be printing any more money?
No, he's going to keep printing money. That's why gold is still, what, 1,800 or 17, wherever it is right now. He is going to keep printing money. That's all he knows.
Mark, just on the short term, I agree with you that he's been doing a lot of that, and that seems to be all he knows. But in the short run, is the market telling us, Mark, today that Ben Bernanke on Friday is not going to give us an indication that he'll be printing more money?
I don't want to predict what Bernanke's going to do any more than I want to predict what the market's going to do over the next 6 months, because the reality is nobody can tell you what the market's going to do. And if you built a great diversified portfolio, Peter, over the last 10 years, you should have at least doubled your money there too. So, the thing you don't want to do is speculate on bubbles. I don't get paid to chase bubbles or panic when the market crashes. And right now, gold has been run up. Every investor knows you don't buy when it's high, you buy when it's low.
Hold on, Peter. Mark, as the bubble burst. Is that what's going on right now? I understand you think that, Peter, but do you think the bubble has finally burst, Mark?
No one can predict the exact time that the bubble bursts for gold, like they can't predict the exact time when the bubble bursts for tech stocks. But there's no historic premium. You need at least 64 years in the asset category to know where there's a premium there. And historically, there is no premium for owning gold.
We can't wait 64 years. Just tell us, when are we going to know whether the bubble is burst or not? You think it's a bubble. When is it going to burst? What indicators do we look for to tell us that it has burst, Mark?
A bubble is any asset category that does not have any long-term reason to go to have long-term premiums. The long-term premiums you're looking for are small-cap stocks, value stocks, globally diversified emerging market
Peter,
stocks,
you would say
gold.
The reason to believe that gold is going to continue to go up because there's no reason to believe that Ben Bernanke is going to stop printing money, right?
Well, first of all, people have been telling me gold was in a bubble since it was at 500 when I was buying it back then. But you don't compare gold to stocks. Gold is money. Compare it to the dollar. Compare it to the euro. Compare it to the yen. And so if you're going to compare it to other currencies, what is more likely to maintain its purchasing power over time? Something that's scarce, like gold, that has intrinsic value and can't be printed, or something with no intrinsic value that's being run off a printing press like it's going out of style?
Do you deny that gold has become currency? Because remember, Ron Paul asked Ben Bernanke that question specifically. Ben Bernanke said no. Ron Paul said yes. What do you think?
Think about this. Think about this. The people that say that gold's going forever and the dollars are getting debased are the ones that are willing to trade you dollars for their gold.
Who?
That's insane.
No,
if they
they're
really
not.
believed it, they wouldn't be trading dollars for gold. Oh, look at Goldline and all the people out there selling gold. That's exactly what they're doing.
I mean, people are accumulating gold. They use it to buy the things that they need. But if you understand money and gold, you save your gold and you spend your paper. That's what I'm doing. That's what my clients are doing at Euro Pacific Precious Metals. We are holding gold and we are spending paper. Now, obviously, you have to spend some gold. You got to eat, you got to live, you got to drive your car. But if you want to put money aside to spend it tomorrow, to spend it next year, to spend it in 5 years, what are you going to save? Are you going to save U.S. currency? No, you can't. You got to save something of intrinsic value. And gold isn't becoming money. It's always been money. The founding fathers made it money.
Understood. Are you hedging your bet, Mark, on gold at all? Do you have any percent of your portfolio in gold?
If you build a globally diversified portfolio, you already have gold. You have mining companies, you have distribution companies, you have all kinds of gold. There's no reason to double down and bet and leverage yourself up on it. No. And gold hasn't been a great store of money. After inflation and taxes, gold has been a terrible investment.
No, that's not true.
Term.
What are you talking about?
It is true.
Gold has been an excellent store of value.
Hold on,
4%
Peter,
after inflation of 3 and taxes of 28.
Again, it depends on your time frame, guys. You could pick a piece of any time frame in the past 100 years to prove either one of your points.
Look at the price of the Dow. Last week, the Dow Jones was worth less than 6 ounces of gold. 10 years ago, it was worth 43 ounces of gold. This is a huge bear market in stocks versus gold. In 1970, gold was $35 an ounce. It is $1,800 an ounce. You're telling me that that hasn't kept pace with inflation, that people haven't preserved their value? In fact, look at the price of oil. Oil is cheaper today than it was 30 or 40 years ago if you're paying for it in gold. It's more expensive if you're paying for it in dollars, but not if you got real money.
Okay, guys, we're going to bring a panel into this discussion. We know what Wall Street wants the Fed to do, but what's good for the Wall Street is not necessarily good for the Main Street. Here's what Fed President Richard Fisher told me earlier this week about the impact of the Fed's new 2-year freeze on interest rates. Take a listen.
Now they know that consumers know, they can put off an expense because the cost of borrowing will be held at a very low rate for 2 years. I just think it's not an incentive, it's a disincentive.
So if the Fed serves small business, what would it do on Friday? Amelia Antonetti is a small business owner. Lee Hawkins is a columnist for the Wall Street Journal. And Tammy Bruce is a Fox News contributor. Amelia, what does small business want? What do they want from the Fed, if anything?
Well, we would definitely like them to make it so the cash flow for us is easier to get a hold of. But the reality is we don't qualify underneath the new rules and regulations. So for small businesses, we're still in the same golden handcuffs that we've been in for a long time.
And by the way, Richard Fisher said it's up to politicians to get rid of the high regulations, to get rid of the high taxes that prevent small businesses from expanding.
They're going to want to see things that are going to promote lending, things like reducing the interest rates at the Fed and what they're paying on bank reserves and things like that to make sure that people can have easy access to capital.
And it's the front end, not the back end. Okay, now if you look at the ridiculous that they're talking about the rules and regulations, they're talking about the back end of that. That's not what small businesses are talking about. We're talking about the front end.
Tammy Bruce, one of the things that's killing small business is the inability to plan for the future. They don't know what these cockamamie guys inside the Beltway are going to do, and they don't really know what the Fed is going to do except print more money. If they have some security that the value of their dollar, the dollars that they're earning, will be worth the same a year from now, that gives them some sense of assuredness, of knowing what the future is. Wouldn't that be best? That is to stop Ben Bernanke from printing money?
Well, look, that's what all of us want. We want some security. We want to know what the next year is going to look like.
By the way, not all of us, Tammy. Forgive me for interrupting, but that's not true.
Yeah.
So the speculators want cheap money. They want Ben Bernanke to print more.
Regular people. The regular people trying to make a living day to day, we want to know what's going to happen. And, the truth is when the Fed decided to hold off on any, for the next 2 years on interest rates, they were saying we can't do anything now. And the reason they can't do anything and reject the notion of the Obama theory of regulating the world and regulating people's lives is that in order for things to work, people have to be left alone. They have to be left to be able to thrive with their own decisions. And really, the American system and the free market allows people to know that their work and the nature of the consumer and our own optimism for the future has always worked before. This overreaching and the involvement is the thing that's killed us, and I think that's what's making people nervous.
Peter?
Well, you know what we need? The problem with the country is rates are too low. That is the problem. We need higher interest rates. All this cheap money is fueling speculation on Wall Street. There is no money on Main Street. In order to get real capital to small business, we need to encourage savings. Only by having a real pool of savings do banks actually have any real purchasing power to loan out. So we need higher interest rates. But the more gasoline the Fed pours on this fire, the bigger it's going to get.
That's exactly what Richard Fisher was saying, by the way. Mark Mattson, is there any reasonable person out there that you know of that's saying that we need more cheap money, that the Fed should be printing more?
Not any reasonable person, and no, the Fed shouldn't be. Look, interest rates are already at an all-time low. Businesses won't borrow money because there's too much risk out there. They don't want higher taxes. They don't want more debt stimulus. They don't want all this stuff. And entrepreneurs who have to create the jobs are shut down. Even if the bank was giving away money for free, they're not going to take the money.
Amelia, you have to plan for the future, and you can't plan if you're not sure how much the money you have is going to be worth tomorrow.
No, absolutely, and you can't plan for the future when we keep getting this unforeseen thing. They keep jumping in our territory. Exactly what you're saying. You've got to get out of the way. Let it stabilize.
One last
Once
thing.
it stabilizes, we can plan to move forward. But as you keep messing with the problem, you're stopping the economy from doing what it's going to naturally do.
Okay, Tammy, you got to do it in 10 seconds, quickly.
Obamacare, that is the thing small business also doesn't know what it's really going to turn into. That's got to be ended in order to lift up some of this uncertainty.
Guys, thank you very much for that. Peter, great to see you. Peter Schiff, Mark Mattson, and we'll see more of our panel coming up. So what do you think? Gold, as it is now, is it a buy, sell, or hold? A lot of people were selling today, down $100 in just one day. Text us your answer to 369-249.